Hi all, welcome to NAVIA Markets Limited. This is a presentation on SREI Infra. First, let us look into the businesses SREI ventured into. SREI Infrastructure Finance Limited is one of India's leading non-banking financial institutions. If you see the businesses, they include equipment financing, project development, advisory, and venture funds. Simply putting, SREI caters every need of a infrastructure company, starting from the initiation of the project to completion of the project. That's how it has transformed itself into a holistic infrastructure solutions company over the years. SREI customers primarily belong to the micro, small, and medium enterprise category. This segment is primarily unaddressed by the public sector banks and also the larger private sector banks. And there's a lot of potential which is hidden in this segment. That is what SREI is trying to tap. SREI operates a joint venture with BNP Paribas Lease Group in infrastructure equipment financing. BNP Paribas Lease Group is a leader in this particular segment in Europe. The holistic nature of SREI Infra can be explained through this diagram. This equipment financing includes all this, and project financing is done in the form of debt, measure, and equity. Project development is done in roads, airports, mass rapid transit system, and all. And advisory, it is done in this process: project conceptualization, project monitoring, and so on. Venture funds, in the form of equity, measure, and debt. That's how SREI Infra operates. Let us look at the sector outlook. If you see, non-banking financial institutions act as principal channels of credit delivery to the micro, small, and medium enterprise. As already said, this segment is being neglected by most of the public sector banks or high-level institutions. So that leaves a strong potential in this industry to these non-banking financial institutions, and SREI falls into this category. And as recession is receding and the situation is trying to normalcy, the disbursements for these kind of NBFIs are expected to increase a lot, and they're expected to report robust growth rates going forward. If we see in infrastructure sector, where SREI is, SREI caters to, the infrastructure requirements of the economy are very huge. The total investment on infrastructure during the 11th five-year plan is expected to be around 7.5 times of GDP. This is in financial terms. Just want to quantify things and show you how potential is this sector. In financial terms, it's almost constitutes 7.5% of GDP for the 11th five-year plan. If you see the capex for the infrastructure development, it's around $514 billion. That's huge. It is. And the present construction equipment industry, which is the prime business of SREI, equipment financing, that industry, which is $2.3 billion now, is expected to increase manifold to use $15 billion by 2015. That's how much huge potential is hidden in this industry. If you see the sector-wise infrastructure investment in the 11th plan, this is how it is distributed through electricity, roads, telecom, and all. It constitutes almost $514 billion. $514 billion. And SREI has executed projects in all these sectors, and it is exposed to all these sectors. And so, with this much investment going forward, SREI is expected to benefit a lot. Now, let us see the investment document in the sense what are the credentials of SREI. It has reported a 58.6% CAGR growth in revenues, 31% CAGR growth in PAT, and 41.4% CAGR growth in disbursements over the last 5 years. Going forward, we expect better than these growth rates in the future. And it is the market leader in equipment financing with a market share of almost 30% and 15,000 customers. Even though a lot of new players are coming into the field, like Shriram Fortune or Shriram Finance or Bajaj Capital and all, SREI's prior experience and their successful track record in this field will help them sustain their market leadership, and also their recent joint venture with BNP Paribas Lease Group will help them get funds at a lower cost, which will give a competitive advantage for this company over the new players. It also is having an impressive net NPA figure of 0.47 for 2010, which is one of the lowest in the industry. That shows the great quality of their disbursements, and also this NPA figure is after following strict NPA norms, which are more strict, which are not strict compared to RBI norms. High capital adequacy ratio of 39.18%, against 12% by prescribed by RBI, and its increasing presence in high yielding services like product financing, product advisory, fee-based services, other than its core equipment financing business, will help it increase its operating margins going forward, and also will help it in improving its bottom line growth. As already explained, joint venture with BNP Paribas will help in reduction of funding costs. It made significant investments in various road projects, and almost a rupees 12 billion short-term debt is issued to QIPCO. And these things are supposed to affect positively in the shorter term, because these road projects are going to get commissioned, and also if they go for IPO, the value unlocking may happen, and this will give substantial gains to SREI in the near term. The company's recent attempt to restructure it. In its recent con call, the company has explained its intention to restructure its businesses into few core processes, and also it gave a timeline for it. This will help the company to concentrate on its few core processes and benefit most from few core activities. And moreover, the important thing is SREI management believes, and also we also believe that they belong to a niche segment in the infra space. In the sense, they are catering to a particular segment, and catering in a particular field which is where proper benchmark is not available. There is there is no proper peer for SREI, because the portfolio of SREI's businesses are cannot be seen in other companies. So this makes SREI kind of very different from other segments, and which is not properly comparable to other peers. So because of this, SREI is being underrated in the market, and if you see the PE of 7.5 of FY 2010 and 6.6 of FY 2010, 11 EPS, this shows that FRE is very cheaply valued compared to other big NBFIs. At this valuation, the stock is looking relatively cheap, and based on our valuations of relative PE and P by PV, we expect the stock to and also because the fundamentals are improving both domestically and globally. Based on these and our valuations, we expect the script to rise to 106. There is a 35% increment in a time horizon of 8 to 10 months. So here are the projected financials. These P's, forward P's, and also let us not forget the risk involved. If a double depreciation of any kind occurs, which will tighten liquidity, this may affect the cost of funding for the company, and also will drastically affect the operations of the company. And as the company belongs to a niche segment in the infra space, value unlocking may take considerable time. And also one more thing is FAs have strong holding. FAs have heavy holdings of around 34%. Of course, this indicates if you've seen a positive sense, this is a good thing that FA has seen an interest in. The FA has seen some value in the company, but in a negative sense, this may this may create volatility in the stock in global turndowns and all. So finally, what we emphasize our stand on SREI. We are bullish on SREI and expect the stock to give at least 35% return in the coming 8 to 10 months. Thank you.